right. I think we're going there. Yeah, good. All right. So before we really get going in lecture here, I wanted to just touch base with you on the project, the security analysis. And so let me jump in here to the class Canvas page. For some reason, I don't know why I didn't do this. I didn't publish a lot of the material that I normally share with students as they're working on this project. So I want to bring this to your attention. A couple of you had asked about, well, what is this additional notes thing? And all of a sudden it dawned on me I had not published that. It's here on the page, but I hadn't published it yet. So this, if you'll go to modules, there's a section called Security Analysis Project. This is very important. It has, it's somewhat of a repetition of what you already see in the assignment, but, this has some additional detail as well. So you'll want to make sure that you read over this. The first part of what we're doing is this August 6th due date. But the rest of the assignment is described. So here would be an example of the kind of the executive summary, the cover page of the report that you're ultimately going to create for me. And this goes on. I pretty much copied and pasted this into the assignment that you all see on Canvas. But here it is again. Then in the blue is the next due date, which is about I think I set it for a week from the first one. So I added an extra day onto this one. I made it August 6th just to give you a little extra time since I'd realized I had not given you some of this information. Not that you couldn't get this without it, but it certainly will help. So, and then the next set of items would be the pro forma financial statements, which you've all had a chance to look at that video. And whoever is doing the Excel part of the project, and usually I'm not saying you have to do this way, but usually groups will have one person at least start on it and work on that Excel spreadsheet. That pro forma financial statement can be tricky. And so go back over that video as you're building it. I want to be able to change one of the items, for instance, growth rate, and see everything update. The income statement all the way down through net income. The balance sheet should update. It should also balance. And then your cash flows should also be updated. So you want to build it with formulas. It's not not all fixed values. And then the pricing of the stock. This is kind of the nuts and bolts of it. This is the real deal that you need to work on. And so you can use a variety of the methods that we've talked about. Probably the most reliable would be this discounted cash flow analysis, which is going to come out of your pro forma financial statements. So that's why that spreadsheet is so important. You want to get that done first, or rather, I guess you don't necessarily have to get it done first, but you want to get it done so that you'll be able to have the inputs for this discounted cash flow analysis. You'll also want to do a sensitivity analysis on all of the valuations because a point estimate is almost always wrong, but a range, at least you've got a shot at getting the right answer, or the right answer falling within that range. And then the last bit that's due the night before we have the debate, which is the second to last class period, is some additional writing. So I want you to think about the critical assumptions, the investment catalyst, value drivers, and I've got descriptions of what each of those are. So these are links. You can just click through it if you have any doubts as to what those mean. Pros and cons of owning Sherwin-Williams as a stock as part of your portfolio. And then here too is kind of here's what the final report looks like. You've got a title page, you've got the table of contents, you've got that executive summary. That's that page that I showed you just a minute ago. some of the pros and cons, pricing of the stock, ROE decomposition, coefficient of variation, all the graphs, and then your reference materials. And somebody asked about whether, I needed all the PDF files, and the answer is no. Just provide the links to everything that you've used to do this. And by the way, this is all electronically submitted. Do not use Google Sheets. Use Word and Excel. And then, of course, you're kind of the end of it. Once you've really know this company inside and out, what makes it tick, you're going to come up with a recommendation: strong buy, hold, sell, strong sell. And then I've also got on this sheet a few FAQs, things that people have asked in the past that more than likely you'll run into some issues with as well. And then this last page is how I grade the thing. So 15% on the in-class debate. A lot of that is were you participating? Was your team participating in it? Research materials, did you gather those research materials? That's this 15%. And then 45% on the valuation and the quantitative analysis. That's the ratio analysis, estimating your growth rates, the RIM, the relative valuation, and the pro formas. And then the qualitative analysis, critical assumptions, investment catalyst, value drivers, pros and cons, and then the one-page exec summary. So that you can kind of check the box. Did I do this? So this, you'll make sure that you've covered all of your bases. And that's it. So make sure you take a look at this PDF file. Come on back here. There we go. And then I also have a fair amount of additional information that relates to this project. The additional notes are some things that I've gathered out of other textbooks that weren't in this text, or possibly in just a different format. So again, you'll want to run through these and have a look at them. Quite a bit there. I think I've got 10 pages of additional notes. Let me close this up. Keeps popping me back up here. If you close these banners up, it'll go straight to the first one open. I've got an example of a security analysis report that's done by a professional. And so this is Darden Restaurants. So you can kind of see what the real deal looks like. Are you going to have something that looks exactly like this? No. This requires much more work and experience than what you all have. But you can, use this as kind of the reach. This is where you want to go. And obviously some of these things, for instance, you're not going to have a relative strength measure, S&P quality ranking, things of that. Some of these things are unique to the analyst that produced this particular report. But here's an example. And then I also have a few things here on, I'm going to have to update this. I didn't, this was for the prior security analysis when we did the Sprouts Farmers Markets. This is the industrial lookout or industry forecast and outlook. This comes straight off of Bloomberg Intelligence. I think some of you were asking about this. So actually you can get it for specialty chemicals on Bloomberg. And it's, I'll let you dig around for that because that's part of how you learn the system. Valuing a company with negative earnings, we don't currently have that problem. But all of the things Damodaran, that's Aswath Damodaran, that's the gentleman that we watched on the video at NYU. All things that he produces are useful and helpful information. In fact, go to his website, use his videos on valuation. I've got several in the. Let's see, where did I put those? I'll have to look those up. I think I've got them in the announcements. But he's got a whole playlist of videos on valuation. And many of those are quite helpful and very relevant to the project. And then this Chipotle stuff are things that Nancy Bonacci, who is one of our alum, she also was the research director at KeyBank and is actually the vice chair of the board of directors now. She shared this with us back last summer when we were doing Chipotle as a security to analyze. And this will just give you some idea of what the KeyBank analyst was thinking about when he was looking at Chipotle. So there are 3 PDFs there. And then this last bit, if you wanted to use RIM and yet you wanted to do it in a 2-stage, here's the 2-stage version of the residual income model. So some additional information. As I find any more things, I'll add those. If you find something that's helpful that you want to share with the group, with the class, please let me know and I'll add it to this resources page. Otherwise, how are things going on that? Yes, Matthew, you had a question?
Yeah, what exactly are you expecting us to turn in on Friday? Do you want a Word document or Excel file? Or...
Yeah, I think you've got several things here. So part of it's going to be a Word, but the part of it's also going to be Excel. So you can turn in the Word document with the link to the 10K, the 10Q, industry-related data if you want, the outlook, the economic data could be in a Word doc. Any other data, particularly out of the popular press that relates to Sherwin-Williams, to the industry, to the competitors, things that are current that you are thinking about as an analyst that are important to the valuation. And then down here, of course, you'll need to do this bit here as a spreadsheet. So more than likely, most of you will have 2 files. One is a Word doc and the other is a spreadsheet. And you can do the graphs within that spreadsheet. ROE decomposition, you could do it either way. Probably do it as in the spreadsheet though. And on the spreadsheet, try to organize things neatly, use tabs, that sort of thing. So that it's relatively easy for me to follow what you're doing and where you're doing that in each of the docs. And then this last thing, the coefficient of variation, could also be a spreadsheet item. And in terms of details, that additional notes has some examples of how to work through the DuPont analysis, as well as how to calculate a coefficient of variation. Does that help?
Yes, thank you.
Okay, sure. Any other questions, comments that you all have? Any problems you've encountered so far? So let me just walk through some of this, and Joey and Alan, if I missed something that we talked about earlier today, feel free to jump in and say, hey, what about this, or so on. Don't save. Oh, come on. Just get out of my way. Bloomberg likes to pop up a lot of windows. All right, so I've already loaded my equity here, and this is Sherwin-Williams, of course. To load an equity, all you have to do is start typing in the name or the ticker if you know it, and then it comes up down here, and I've loaded PPG. As the equity, and I can go back to a prior one, so I can go back to Sherwin-Williams just by clicking on that. One of my favorite functions on here in terms of getting the data I need for a company is the financial analysis one. So all you have to do, you can either type it in FA, or you can actually go up here if you've used it in the recent past, and just click on that. And that will get you to a lot of the data that you're going to need for this if you haven't already gotten it. So let's start with the ratios. So that's this little tab up here. I'm going to be able to get most of my ratios out of here without any problem. So here I've got profitability, margin. So I've got ROE, ROA, return on capital, return on invested capital. A lot of those are going to end up being the same or redundancies. We don't need all of them. We're going to download everything, though, just to make it simple. Then we've got gross margin, EBITDA margin, operating margin, pre-tax, net income margin, and so forth. Variety of things. If you want a description of what each one is, I believe that is that just plots it there for us. I thought we could click on it and get the description, but I'm incorrect on that. Oh, here we go. It's a right click and you get a definition, all right, of precisely how that's calculated. So I'd recommend going in there and just double checking what it is that you're actually getting. But one of the nice things about using the terminal here is that you're going to use it not only to get Sherwin-Williams ratios, but you're going to use it also to get the ratios for your subject companies, for your comparables. All right. So,
Can I ask a question?
yeah, please do. Please feel free.
So I thought one of the things that we had to do was fundamentally calculate those from the balance sheet and income statement.
Yep.
But I guess maybe it was a mistake on our part. But one of the things that we were running into is when we were trying to do that calculation, whether it's on the liquidity side or some of the other ratios, we were actually coming up with like different numbers or the formulas that were in the sheets that you shared with us.
Yep.
Like point for point. And so like we were coming up with different numbers and weren't sure what we should be using. And I guess we were going back and forth on this for quite a while last night. So maybe just some feedback on that part.
Sure. The simple answer, Bloomberg is taking care of a lot of that difficult work for us. The more detailed answer would be simply there are a variety of ways of computing a ratio. So, for instance, when we're looking at a return on equity, think about the equity piece of it. The return piece of it is net income, right? That's the numerator. How do we get net income? Well, we've earned that net income over the course of a year. The denominator is a balance sheet item, and remember, whereas the income statement shows us what happened over a period of time, it's more or less a movie, if you will. The balance sheet is a snapshot. It's a photograph. So it's a single point in time. So what a lot of people will do when they're calculating an ROE is that since the numerator is over a year, I'm going to take an average of the equity value over that same year, rather than either the ending or the beginning. Just take an average. And some people will, and you might do that on a quarterly basis. You could take the ending plus the beginning, divide by 2. Variety of different ways. None of them are necessarily incorrect. I mean, certainly the closer we can match to when that income was actually earned, the better off we are. We're not at that point, though, with our analysis. We just want a reasonably close guesstimate. And then still, again, others will just say, well, I'm doing my return, my net income over the year, but I'm just going to use the ending value of equity. Keep it very simple. So that's why I say look at the definition here for more details, but I would just go with what's being given to us in Bloomberg. I wouldn't worry about, let's see, hang on a second. I got to get this out of the way so I can close this window. I wouldn't worry too much about that level of detail, all right? If you're in AC 310, which is accounting for finance majors, or if you're in a financial statement analysis class, they're going to hammer you on those details. What I'm here to say is, I'm not here to say the details aren't important. What I am here to say is that we're looking at a bigger picture. All right. And I don't want you all to spend any more time than you already have on that sort of thing. I want you to think about how all of these pieces fit together. And again, to use my tired analogy of a jigsaw puzzle, that's just one little piece. And whether we get every single piece in there and it's just right is less important that we get most of the pieces together so we can see what the heck the picture looks like. So I don't mean to diminish that value, but yeah, fair question though.
No, and I totally understand that, Dr. Elliott. And it's just one of those things where when it says compute and you want to calculate those things, and we're spending a decent bit of time trying to do that,
Mm-hmm.
and then a day before we're ready to get these things turned in, or at least kind of push that first deliverable over the finish line, it's just a little disheartening to hear that some of that effort might have been not necessarily needed on the outset. So again,
Well, and I'll take part of that rap, but also remember I pushed you guys to Bloomberg, and so getting onto Bloomberg is important. I know we've had problems with that, so Bloomberg's got to take part of that rap. But yeah, I hear you, and let me put it to you this way: it was not, digging into the nitty gritty, getting into the muck of the ratio, how it's computed, is not a bad thing. It's still a learning experience, and I'm okay with that. And to assuage some of your time constraint, I am going to extend that deadline for this first deliverable. So hopefully that kind of evens things out a little bit. What you've already done is not bad at all. It's just that spending too much time on that is counterproductive for what this project is.
You probably learned more about the Bloomberg terminal in the last 72 hours, and using our relative value, the RV equation, to pull some of those relative statistics, and a lot of different things that we probably wouldn't have explored if we didn't have the necessity to try and go down that rabbit hole. Right,
true, and hopefully yeah, there's a give and take here, and I don't want you to become so mired down in the marsh that you get frustrated. So that's why I thought I'd spend a little bit of time this class period and extend that deadline. The downside to that is we really can't push the other deadline. The second deliverable still has to stay pretty close to where it is next Friday, a week from tomorrow. So, because the final deadline is, or the third deliverable, I should say, is Monday night. And then we do our debate Tuesday in the class. So, you'll have a little more time to clear the decks and get this done quickly, and not have to continue to calculate your own ratios. But that's, like I said, that's part of what is the value of Bloomberg. So now to actually download this, simply go up here to Excel, current templates, and it's going to start up a session. Are you seeing the Excel start up there?
Yes.
Okay, great. Now, if you're on the terminal, what you're going to find is that all of these cell references are formulas. And what Bloomberg is using is the Dynamic Data Exchange, the DDE, that's been built into Excel for ages. So you saw that it was computing things here, and eventually the values showed up. But when you go up here and you look at that formula, it's equals BDH, open parens, SHW, US equity, blah, 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 blah. So be careful. If you're on the terminal, the best way to manage this is to do a copy and then do a special paste, values and format only. That way, because if you don't do that and you just export this spreadsheet as it is, these formulas are going to be here, but you're not going to be connected to Bloomberg, and you're going to get a bunch of errors, and it's going to be meaningless. So now here I've got it set up where if I do this correctly, I can save as, and I'm going to go, wait a minute. No, sorry. I believe actually, let me do this. In Citrix, I can do a download, and Citrix will download it for me, just the values only. So this is profit ratios. Oops, wait a minute. I take that back. Hang on a second. There we go. So I want to, when you're in your remote, here's the little Citrix. See that half circle with the dashes in it in the middle? I hover over that. That's my Citrix interface there. And I click on that. I do download. And now it doesn't bring it up. Of course, Murphy's Law. Oh, here we are. No. There we are. It brings this up. And I click on that and open that. You see did you see the little download logo going down to my desktop? So that downloaded the spreadsheet. Now I can open that up. And I've got my data there. I don't know why this one opened up with the formulas still in there. That was working fine last night. Let me try that again. And now let me try the download again. I don't know why that's not cooperating with me. All right, let me go back. Let me punt for this one for a moment. What I'm going to do is I'm going to do a select all, copy, and then paste that into Excel. I'm going to use my special paste, and it's going to paste in my values. Hang on a second, and I will change that share so that you can see this. So here is my spreadsheet with the ratios. I know I was getting it to just download and make that conversion last night. I don't know what I don't recall what I was doing differently, but you saw what I just did. I just did a copy in the Bloomberg terminal with that version of Excel open in Bloomberg. I did a Control A twice, Control C, that's the copy. Then I moved to my local version of Excel, opened up a new worksheet, and did a special paste. So that's up here, and just did text and brought it in. So you can do that with all of these ratios. Let me move back to the other screen. All right. Any questions on that? How I made that shift? All right. I'll see if I can't figure out what it was that I was doing last night, save you that one step. But for the worst case scenario, it's not that hard to do that. All right, so I'm going to clear out the Excel right now. Then you've got several other ratios that you'll need. You need some liquidity ratios. They're right here. You've got your current ratio, you've got your debt to equity, debt to assets, that sort of thing here. Don't need all of these things, but what I've been doing is just bring them all down, make a spreadsheet, and then I'll clean it up afterwards. That's my workflow. If you'd rather just take item by item, that's fine too. for instance, all kinds of interesting things down here. This Altman Z-score. Altman Z-score is a measure of bankruptcy. How likely is the firm to go bankrupt? And again, if you right-click, go to definition, it'll tell you about Altman Z, how to interpret it, and how to read it, that sort of thing, how it's even calculated. So while I'm asking you for specific ratios, it doesn't mean that you shouldn't add others if you think they're useful. All right. You can also go over here to working capital ratios. You can get your accounts receivable turnover, inventory turn, accounts payable turnover, if that's relevant, if you think that's useful. Go here to the DuPont analysis. You're going to get your operating margin, your asset turn, and your leverage ratio, as well as, of course, an adjusted ROE. And that will help you on that DuPont analysis. And notice you're getting this from 2011 all the way over to 2020. Now, let's say that you have one of your comparables is PPG. Just going to go to PPG. And I can do the exact same thing with PPG. Go to the ratios, go to DuPont analysis, and there are all my ratios for PPG. And again, I go over here to export that Excel, copy, special paste onto my local Excel. Now I've got PPG's ratios. So it becomes a fairly fast process when you're doing that. The one set of ratios that you're not going to find on this list, this sub list right down here, would be the price to earnings, price to book, price to cash flow. And you're going to find that on the key stats tab over here in multiples. So we go to multiples, and there's our PE, price to book, price to sales, price to cash flow, various other ratios that may or may not be relevant, that you may or may not want to use. I've only required that you come up with, price to earnings, price to book, and I think price to cash flow is on that list too. Now you've got a variety of ways of calculating it, right? So they do an average, a high, and a low over the period of time. And again, right-click to get a definition to know what you're looking at. I leave that choice up to you as to what you're going to use there in terms of which of these specific ratios. So again, export to Excel, Control A, Control C, bring it down to the local version of Excel, and do a special paste. Boom, there's your multiples. Okay, questions so far?
I do have a question, but it's not pertinent to this.
Go ahead.
Yeah, so I'm just thinking ahead here when we get to developing the performa. You give us a little tutorial how we pull the income statements and the balance sheets from this terminal?
Yep. Yeah, absolutely. That was the next thing I was going to do, in fact.
Okay, great.
Anything else on ratios? So basically, let me share with you too one other thing that we talked about. Go to Excel again. Okay. So this is Sherwin-Williams. So what I'm going to do is I'm going to make this tab SHW, and I'll call this worksheet ratios or something. So what I'm going to do is I'm going to have 4 other tabs in here, and I'm going to have all of my comparables with all the ratios. So I'm going to take the profitability ratios, the liquidity ratios, all of that for Sherwin-Williams. I'm going to put it on this particular tab and this worksheet, within the workbook. And I'm going to clean it up. I only keep the ratios that I'm going to use. And I'm going to do the exact same thing for the other 4 comparables. So whatever they are, you're going to pull that same set of data for those 4 comparables. And you're going to put that first one here. And again, I don't want to put ideas into your head, but let's say, for instance, it's PBG. What you're going to want to make sure that you do is, let's say that this is our entire list of ratios here. And you'll notice that for fiscal year 2011, the ROE is in column B7 of this worksheet. Okay. I want the ROE for PPG for 2011 fiscal year to be in column B, cell or row 7. I want all of those to line up perfectly. And the other 3, same deal. I want that to be that 2011 fiscal year ROE to be in cell B7, column B, row 7. And then everything else to the right will be 2012, 13, 14, so on. And then down, I want the same thing. I want all the ratios in exactly the same order in exactly the same cell. And that's going to save me a lot of time in just a second, and I'll show you why. Because what I typically do, and again, if you want to do something differently, your workflow is different, that's fine. I'm just showing you how I would do this and how I've done it in the past, and it saves quite a bit of time. So what I'll do is I'll come over here, and I'll call this my average, oops. So what I'll do here is I'll use the average formula, and I'll notice that, okay, my ROE is in B7, and I'm going to go to the other comparables. I'm going to go to B7, there, comma, next comparable B7, comma, next comparable B7, comma, and the final comparable B7, close parens. And I know it's empty. It's telling me it's empty, but oops, what happened? Oh, I know. It's telling me I didn't write in average. That would be, there we go. That would be helpful. So, of course, I'm getting an error because I've got zeros in there. But you get the idea. I've got this average here, and it's for the 2011 fiscal year ROE for all 4 of my comparables. Okay, so that value is the average. Now all I have to do to get the other years, sorry, I've got to move my my zoom window out of the way. You know, I just fill right. There's 13, 14, 15, 16, 17. I'm running out of space here. $18, $19, and $20. Boom, it's done. And then fill down. Everything's done. And I go in and I do a little cleanup because obviously, you know, these 2 are empty rows, and down here, empty rows, etc. And so a little formatting. Oops. It's trying to do a date on me, but maybe that'll work. So I just label it and that sort of thing. Now I've got all my averages, and to do my, if I want to do my graphs, then my ROE graph, let me extend this out so I've got a little more space. You know, this is one of the components. That's my Sherwin-Williams, and then this is the average of all the others. And I do my graph. I do the first graph, spend time on getting it just how I want it, doing some formatting. And as soon as that's done, I copy that about a dozen times. And then I change from row 7 to row 8 to row 9, etc. And then you're done with this thing in just a matter of minutes. And you've got not only the ratios for comparables, but you've also got the graphs with the average of the comparables and then our Sherwin-Williams by itself. Sorry?
Quick question, because one thing I think you made sure to clarify when you were with us that maybe you didn't hear, when you go through to make your averages, the comparables, you don't include.
Oh, yes. Yep, good point. Thanks, Alan.
I think you may have in the example.
Oh, did I write here?
I could be completely wrong, but
I think I left it out. Yeah, I just did PPG and then sheet 3 just down here. Yep. Yeah, when we were looking at it, I did make that mistake, and you definitely don't want to include Sherwin-Williams in your averages. The other thing that I could say is that you want to go over and you want to look at all of the individual values and make sure there are no real extreme outliers, either direction, either really high or really low, so that these averages are actually meaningful. Because what you're going to use these plots for, they're not an ending in itself. They're kind of really more of a beginning, because what you're trying to figure out is what is it that Sherwin-Williams does really well relative to its comparables, and what does it not do as well relative to its comparables. And so you're kind of looking for where are the bodies, where are the weaknesses to this company, where are the strengths to this company, and this will help give you clues. But like I say, it's not an end in itself. It's just the kind of the beginning of the trail. I equate being an analyst a lot to being like a detective, because you're trying to figure out where's the value, where does it come from, and how much is it. So, yeah, but good point. Thank you, Alan. Make sure you don't include the Sherwin-Williams in your comparable averages, and then also check that there's nothing really weird about any of them. So you might have maybe in 2013, all of a sudden the average ROE blows up, goes way high. So I would start looking at my comparables and, oh, yeah, here, something happened with this one. This looks weird. I might even just throw it out just so I have a more meaningful graph. Ideally, if we had a lot of time, I would try to figure out what happened. What happened to that company? We don't have that kind of time, but you get the idea. So there, you've got your plots done. You've got all your ratios in, and off we go. Now, let me go back to the Bloomberg, and we'll get to the income statement. So I'm clicking on IS, income statement. And here are all of my income statements from 2014 up to 2020. And there's also a trailing 12 months. That could be helpful as well. So I'd want to bring all of that along. And then, just like we did before, go to Export, go to Excel, Current Template. It'll open up a version of Excel within the terminal. And as soon as we've got the data calculated, we can do a Control A to select all, Control C or Command if you're in a Mac. And then I would go over to my workbook, and you might want to put this in a separate sheet because you're going to be doing the pro forma, whatever is convenient for you. But over here, I'm going to do a special paste. I'm just going to do the text, and OK. And there's my income statements. Do likewise with the balance sheet, and you're ready to start building your pro forma. And you take a look at that video then on YouTube as far as details. It's not tough to do in general, but it's easy to make one small error. I was going over this with one of your classmates, and we found, hey, it's just one column reference was off. And that, it's tough to find it on your own. If you run into, if you're, you think you're 90% of the way there, but you're banging your head against the wall, trying to figure out what it is, send me the spreadsheet, or let's set up a Zoom session And usually it's easier for a fresh set of eyes to see a problem than it is for you to look at it again. I find I can't copy edit my own papers, right? Because I overlook every spelling and grammatical mistake because I wrote it. Somebody else looks at it and goes, "Oh yeah, hey, look, come on, seriously?" So you've got your income statement. You can do your balance sheet the same way, and that is.
So Dr. Elliott, I just have a question about
Yeah,
the performer.
sure.
All right. So the kind of the purpose of the performer is to discount everything back to present value, right?
Yeah. So, and let me expand on that a little bit because so what you're running to do with the pro forma is to guesstimate what the financials are going to look like for Sherwin-Williams for the next 5 years. All right. And so you're going to, at the end of the day, what that exercise is going to produce for you is a cash flow, free cash flow to equity at the bottom of each for each year. So you're going to project 20. Well, we're going to have to project 21 because we're not quite there. 22, 23, 24, and 25. All right. You're going to get a free cash flow to equity for each of those 5 years. Then there's one other cash flow that you're going to have to get, and that is, what's this thing going to be worth from after 25 on out to infinity? I guess infinity is that way, right? So that is typically what people do is they use some sort of multiple. So that means we need to go back here to the key stats. We're going to look at our multiples. One thing we could do, and we could look at price to cash flow since we have it here. All right. And so 2014, the price to cash flow was 20.9, dropped to 14.15, 18.6, 19, 17, 15, 16. You could take an average of that. You could go to the comparables and average those in too, or you could just use the most recent year, the 2020, if you think that's reasonable. This is really more art than it is science because remember, not only are we guessing at what the market's going to value it at, but we're 5 years out from now. So there's a lot of error that we're using here. But nevertheless, you need to come up with a multiple. Just so long as you justify your method, I'm not going to question it, right? Tell me what your method was, why you thought that was reasonable. How can I question that? It may be different than what I came up with. It may be different than what other teams came up with. But as long as you've got a justification for, yeah, we thought that the current and using the comparables and averaging them all together was the best route forward. Okay, I'll accept that. So let's say that we come up with a price to cash flow of 15. All right. So 5 years out, you've got that 2025 cash flow. Let's see, 21, 22, 3, 4, 5. Yeah, so you've got your 2025 cash flow out there. Now, you want to grow that cash flow for 1 year. That's going to give you your cash flow for 2026. Then you multiply that cash flow by your estimated price to cash flow multiple that you just came up with. That, in our case, what I'm saying is 15. So we take that 2026 cash flow, multiply by 15, and that gives us a value of the ongoing firm from the beginning of 2026 out to forever. Now I've got 6 values. I've got the 5 cash flows, free cash flows to equity, and then I have the price at the end of 2025, beginning of 2026. I discount all of those back the appropriate periods so that that last cash flow and the price, those are lined up at the end of 2025. So I discount those back to today. And then I've got the 24, 23, 22, and 21 to discount back. I add those up, and that becomes my discounted cash flow estimate of the value of Sherwin-Williams. Does that make sense? Does that help answer your question, Marcus?
Yeah, so do we need to come up with some type of discount rate? When we,
Oh, yes. Oh, yes. Absolutely.
So where, I mean, that should be probably what?
That's in the second deliverable, I believe.
Oh, is it? Okay.
Yes. And in fact, remind me in just a minute, because I should talk about that as well, because there is some work to be done there. Given the length of time we have left, what I may do is shorten that work up for you, though. But I do want to describe it to you as to what I would ordinarily have you do. Any other questions on the? Any other questions on how to bring down the spreadsheets or ratios, that sort of thing?
I'm still not 100% sure on how to get to that bottom number, the free cash flow number, but I'm going to just call on you after class or in your office hours or something.
Sure, that's fine. Also, there is, if you look in the, let me go there. I got to move some things out of the way here. Clear up my desktop. All right, so if you'll go to the assignment. Are you seeing this new window in Safari? Okay, great. Go down here. I believe I've got the details on that, or at least a starting point, and you're always welcome to obviously ask questions about it. But if you go to the FAQs at the end of the assignment here, yes, right down here. How do I calculate the free cash flow to equity on a pro forma financial statement? So there's some detail about it. Couple of links. Also, I really like this wallstreetmojo.com link. It's very helpful. It in fact, let me go to that link and show you what it's doing here. This makes it kind of cookie cutter almost. Okay, so this is both free cash flow to, free cash flow to equity and free cash flow to the firm. But the neat thing that they do is as you go through this, they'll show you each of the items that goes into the formula. So you start off with net income. You add back your non-cash expenses, depreciation and amortization, changes of working capital, CapEx, net borrowings. But then they give you an example in Excel of precisely what they're doing. And so this is very much just follow what they're doing here to actually create the formula in your Excel pro forma financial statements. So I really like this link, and they literally, show you the formula here. So that should go a long ways towards making it very straightforward. So ultimately, at the end of the day, this is what we're looking at. You got your net income, add back your depreciation and amortization, changes to working capital, CapEx, and net borrowings, end up with a free cash flow to equity. You've got that formula at the bottom of each year. Just copy right to the other years, or you got it at 1 year, get it right, and then copy it right, fill right to the other years, and then use that very last one, that 2025, grow it at your growth rate, and that's becomes your 2026, and then you do that relative valuation on that one using the price to cash flow ratio that you think is appropriate, and that gives you that's also called terminal value. And I think in that, in here, I talk about here on the next FAQ, I talk about that terminal value. So what I just described to you in words is written down here on the assignment. So that will answer, I think, most of the questions, but always feel free to reach out after you've looked over this. Does that help? All right, very good. Let's see. All right, let me go back to, did I lose the Bloomberg? No. Come on back, Bloomberg. Oh, no. Wait a minute. Oh, there we go. Okay, cool. Let me get this out of the way. All right. So, some of the other things that you can, one of the other things I think that I talked to Alan and Joey about was using Bloomberg Intelligence. So that's BI. That's kind of one of their special value-added things that they uniquely provide. It's quite useful. So when you're looking at industries, you're trying to come up with comparables. Maybe some of you haven't figured out what the comparables are yet. So let's go to equity and industry. Let's go to materials. And we know now that Sherwin-Williams lists itself anyway as specialty chemicals. So here's a list of specialty chemical companies. Here's some news about them. Here is the global specialty chemical outlook. So this is something Bloomberg produces. And I'm going to upload this particular item. I downloaded it as a PDF, but I'll upload this to the module section under resources for the security analysis. But this goes through, a whole detailed analysis of where that industry is headed. Where do the best and the brightest at Bloomberg think this industry is headed? So you can use that as your industry forecast, as your industry outlook. Oh yeah, Adam, you had a question?
Yeah, is there a way to export this? So we actually found this last night when we were digging around, but we were only able to copy and paste the text fields out. Is there a way to get that out if we're on the remote terminal?
Yes.
We tried to print it and PDF it and a whole bunch of different things, but weren't able to successfully get it out so we could actually compare word for word without having side by side of the screen.
Yeah, I believe it's under actions. Well, wait a minute. Whoa. Hang on. Actually, I think it's this link right up here. It usually takes a second for it to generate the download.
It pulled that up, and we were able to view it.
Right.
But then when we tried to save it out or something like that, you couldn't copy and paste it out of the actual terminal window.
And I believe what I did is up here in the Citrix thing. This, and then that, and there. Did you see the little download thing pop down? So there. This is what I bemoan this all the time. You guys have experienced. Bloomberg is not simple. I don't know why they don't make it simpler, but here it is now on my desktop as a PDF file. Let's see if I can find it so I can show it to you. Here we go. There it is.
Perfect. No, I really appreciate that. Again, there's a wealth of information in here, and if you're well versed in using this, it's incredibly powerful. And just for some of the folks even going through the couple of trainings that we've had to do, it's still there's some tips and tricks that might be beneficial to be able to share. Believe me,
I certainly commiserate with you because I use this thing infrequently enough that I've forgotten most of what I learned, and my way of dealing with this is just keep clicking until I find something. I know that there's got to be a way. Now, the other thing that you may have to, and I'm glad you brought this up, Adam, because let me shift over here. Citrix. Okay, so here we are at Citrix. So I've just brought up my Citrix. Do you guys see the menu up in the upper left? Okay. So one thing you should probably do is to go to the Citrix preferences And I found this in the instructions in Bloomberg buried somewhere, because, we wouldn't want just anybody to get in here and use this stuff. Joke, mind you. And you want to make file access read-write. And you want to make devices. I checked both these boxes. By default, they are unchecked. And by default, this is no access. So this is how it started. It started out like this. And I checked both of these boxes. And I gave it read-write access. Restarted Citrix. Restarted my browser. That's how I'm able to get in here and download all this stuff, I believe. I think so. Make sure that you've made that change to the Citrix preferences as well.
Professor,
Uh-huh.
I've been using Bloomberg through the browser.
Uh-huh.
Is there? I think I do have to download Citrix in order to do what you just did and download those PDFs. But I always get stuck at adding an account to the Citrix workspace. It asks for a work email or server address.
Right. You can ignore that.
Okay.
Don't even add it. You'll notice that I don't have any account added here.
So it should work without.
Yep. Yep. And I'm not even, to be honest with you, the technical details of through the browser versus through the Citrix receiver, workspace app, what have you. I'm not even sure about what those differences are technically. But what I was finding, I found this in the instructions buried in Bloomberg that, hey, change the preferences in Citrix. So I did that. And then I was able to get it to play nice with me. So, yeah, good point. Don't worry about that. Don't worry about adding that account. Sure. Yes.
So I have a similar issue. So I actually downloaded Citrix Workspace.
Mm-hmm.
But when I'm trying to open it up via the search bar in the Windows, it's saying that I need to basically add an account. But I've been using Bloomberg through the Citrix browser, I believe. But for some reason, when I try getting to where you were by searching it up and opening it up manually, it's giving me that message.
So you're getting something like this, right? Add account.
Yeah. And I tried putting my JCU email, but it didn't work.
No need to. Just delete out of that, and
Okay.
then just open this up, but go to the preferences, and then you can change those preferences. And you don't need to add an account.
Open up Bloomberg, you're saying?
No, this is under, you still have Citrix open, and I'm not sure how much on the share screen you guys are seeing. Let me see if I can, unfortunately, they don't show me the share screen piece of it, or at least I'm not seeing it. Let's see.
Yeah, I actually ran into that same problem, and I called the Bloomberg people,
Uh-huh.
and they said that you don't need to create any account. That's
Right.
So you can just skip out of that part. You just need that Citrix screen to be open.
Right, correct.
And that's it.
Correct. That's right. And then to do what the additional thing that I did was to go to the menu up at the very top left, at least on Mac, it's Citrix Workspace right next to the Apple. Go to Preferences. And are you seeing the Preferences menu right here? Brandon, are you seeing that?
I'm not. No, not. Are you sharing that screen? Because I'm not.
Yeah. I was hoping I was. That's why I asked. I wasn't sure. All right. Let me. Let's see. Why isn't that? Okay. Oh. Oh God! It opened up a new window, so it thought. Okay, now you're seeing it. Yeah. So go to this. Go read write, because by default it's going to start out here. Go read write. Under devices, check both those boxes. And then that should give you the ability to download this stuff like I just did.
Okay. Yeah, I'll give it a try.
All right. So.
I can't get to that screen. It won't let me pass that box with error message for some reason, unless I'm opening up the wrong thing. But
can't just cancel out of it?
I can click close, but then it just closes Citrix. And it's either add, which is grayed out because I don't have an email put in there, or close, and then it closes the app. And it doesn't
That's exactly what I'm thinking too.
Let me try to work with you guys on that individually, because I suspect that's maybe idiosyncratic to your systems. Are you both on PC or Mac?
PC.
I'm on PC.
Oh, okay. That one I can't do. I totally left the PC world about a decade ago. Haven't looked back. I'll try to help you on that, but yeah, at least on the Mac, you can go down into the tray and open up Citrix, and I get this. I get this, and then I go up and I open up Preferences, and I end up getting this. So whatever the PC version of that is, and then you go to your file access in your devices. But let me try to work with it. Try working through that a little bit on your own. But let's set up a session afterwards. I'll try to get your system set up. All right. So let's see. Let me get back to screen share. Bloomberg. Okay. So I'm going to close this out for the moment. Now, if we want to go back and we want to find out what other companies are in that industry, might be helpful. So I go to market share, and now here's a list of the various companies that have self-described themselves as within the materials industry, and within the subheading of chemicals, they have described themselves as being in specialty chemicals. So here's AkzoNobel. They've got two areas that they focus on: performance coatings and decorative paints. And you'll notice that the overall market share and market revenue, rather, for AkzoNobel is 9721, 9.7 billion. Out of that 9.7 billion, 5.7 is derived from performance coatings, and the other 4 billion is derived from decorative paints. All right, PPG only has one category. So their other industry is completely different than that. You'd have to go look at PPG to see what the rest of that is. So only 8.5 billion out of the 13.8 in revenue is generated by performance and applied coatings. This is relevant to us as an analyst, right? Because when we look at Sherwin-Williams, we see that all of their revenue is derived from performance coatings. So if we're going to use PPG as a comparable, we really ought to know what that extra, what do we have in there? About $5 billion. Where does that other $5 billion come from? How do you do that? Well, you go up here and you look at PPG and you go to the description. So let's go to DES and let's learn a little bit about PPG. Read through there, figure out what else is it that they do. How far from performance coatings is this other area that they're focused on? And of course, you can do all these other functions with PPG. You can go to the financial analyst piece of it, look at some of their ratios here. You can even go to, here's segments. So this would be helpful, right? Because each segment, we can do it by industry segments. So here we go. Here's performance coatings, and here's industrial coatings. Oh, so that's the two categories, right? That's the other 4 billion is industrial coatings. So not that far off of what Sherwin-Williams does. Mind you, here's another thing that you should know about SIC codes, and that is that they are, I've mentioned this before, but they are self-defined. So Sherwin-Williams may pick just one category, and PPG picks two, and somebody else picks three different categories. It's all up to them to self-categorize themselves. There's no like global body. Now the only thing that is set up in advance are the various categories, but it's up to the firm itself to say what are we, animal, plant, or whatever. So keep that in mind as you're looking at this. Let me go back to BI.
Dr. Elliott,
Uh-huh.
are you recording this?
I am recording it, but the way I've got it set up, I'm not recording this screen capture. That's why I was hoping I could get this set up on my iPad. But take notes. Take notes. Let's see. What else did I want to show you on here? You can get some economic research. Oops, wait a minute. Wrong spot. Anybody read Chinese? Okay, so this is just general economics types of things, news reports and so forth. Global central bank decisions, U.S. preview, U.S. insight, charting the Fed path. So a lot of macroeconomic information. Also, by the way, this is actually now over in the BECO app, the Bloomberg Economics function. Okay, I'm going to go back to BI. And what else do we want to see in here? I'd recommend clicking around in some of these other areas too. So while this gives us a few choices, for instance, Avery Dennison Corp is in this sub-industry, according to Avery Dennison. But if you know Avery Dennison, they're the people who make, various pre-printed checks and paper, Post-its, that kind of stuff. In fact, they've subcategorized themselves as pressure-sensitive materials. Probably not a very good comparable for Sherwin-Williams. In fact, let's forget the probably. It'd be a horrible comparable, right? Not only is it in a completely different market, but it's much smaller in terms of its revenue. My guess would be that its market cap is smaller as well. So definitely not a direction we want to go. Nippon Paint, however, on the other hand, might be. So you've got a couple here that are pretty good candidates. PPG, AkzoNobel, maybe Nippon Paint, but I'm asking for 4. Where do you find those fourth ones? Well, maybe go back to General Chemicals. And let's see if I can get back there easily. No. That wasn't it. And that wasn't where I wanted to go either. Just going to go back to BI. As I say, I don't claim to be an expert user of this system myself. It takes quite a bit of time to become expert at it. How about instead of specialty chemicals, let's go to basic and diversified chemical producers. And we'll go again to market share. And there we find quite a few more companies. So we've got BASF, we've got Dow. Some of these international companies might be worth looking at. Mitsubishi, any of the others that you think, Bayer, could be worth looking at. But you're going to have to dig into that company and see. For instance, BASF is probably a good candidate to dig into and look at. So would Dow, but of course Dow may be considerably bigger. But you got to look at each one of these as you're making that determination. What is my other comparable or comparable going to be? All right. I think that's Alan and Joey. Did we talk about anything else in general?
Not that I can think of.
Okay.
I think you've covered most of the bases. I don't have anything else.
All right. Anybody else have questions in terms of paths forward?
The only question that I had is, so on the comparables, we'd already found like PPG, RPM, some of those folks.
Right.
Is it worthwhile looking at other areas that, again, we looked at it kind of from the customer standpoint as well. So like if you're going to buy paint, where do you go? Like Home Depot or Lowe's or some of those that, again, have a significantly larger, like diverse set of products outside of the paint.
Right.
But again, being able to leverage some of those other sellers of that product, is that something that's worthwhile as well? I just want to make sure we're going down the right path and we're not going to have comparables that aren't actual comparables.
Well, I think that's reasonable to think about. And again, Behr paint is part of Home Depot, right? So, but you can't extract Behr by itself. At least maybe you could get a segment, but you certainly can't get a price on that segment. So it'd be tough to do any sort of PE or price to cash flow with it. I guess the questions I would ask myself as I'm looking at that would be, how big is it? And how big is that segment relative to the rest of Home Depot? And maybe you add that in as a fifth comparable or fourth. Maybe you put less weight on it. All of those things are. Sorry?
That's kind of what we were thinking. Is that's like a fifth or a sixth comparable? Just because again, when we pulled it up in the Wall Street Journal, just from like a customer paint market share, they were still relatively high compared to Sherwin-Williams.
Sure. No, and I think that's fair. And in fact, I would be a proponent of going outside this very narrowly defined SIC codes and these sub-industries that, remember, like I said, they self-identify. Maybe they've identified themselves slightly wrong, because this happens, decades ago, and many times the company won't update it. So yeah, I think that's entirely fair, and I think that's a good idea actually, to try to, when we were doing Chipotle, my question was, what other companies are competing for those same dollars? Maybe it's not another restaurant. Maybe it's something like one of these home delivery food services. Blue Apron, I think, is one of them, right? You've seen their ads probably. Or maybe it's even a grocery store with a lot of high-end, highly processed or, prepackaged stuff. One of the, what is it? Schwan does frozen delivery. Maybe it's that. So, think outside the box. I definitely encourage that. Let's see where was I was going to head somewhere else with that too. It escapes me at the moment. Yeah, I think that's there are various other things you can certainly play around a little bit with this. Click on some other links. Look at what you find. This thing is, I know where I was headed. Yep. I don't know the shortcut function for this, so. SPLC, okay. No, something like that. All right. Yeah. This is another really cool thing that might help in terms of figuring out comparables. And so here we have the basic supply chain for PPG. So on the right, Let me get my windows cleared up here. On the right, we have customers of PPG. So we've got Ford, Airbus, Home Depot, Stellantis, Brenntag, and so on, in order of how much of PPG's revenue is accounted for by Ford. Well, 4.39% of PPG's revenue is accounted for by Ford. 3.15 by Airbus. On the left side of this, you've got the suppliers to PPG, and you can see how much of their revenue is attributable to sales to PPG. And then down here at the bottom, you've got the comparables, which we've already looked at. We've looked at that industry. But mind you, this is just who Bloomberg thinks are comparables. You're entirely welcome to shift that around. And we can change, let's say we change this to, let's see what Sherwin-Williams looks like. Okay, Sherwin-Williams is, a little different animal here. So they do Lowe's, and it's a lot smaller in terms of the revenue. And their biggest supplier is Arkema, Graco. Look, one of the comparables down here, AkzoNobel, is not only a comparable, but also a supplier to Sherwin-Williams. So you can kind of get an idea of how these guys work together. Actually, Home Depot is down here. And you can move through the supply chain just by clicking on each of the companies. If I want to move back, I can do that as well.
This was an awesome layout, by the way. I found this last night. I would kill for that in our supply chain, just to have that level of ability to see everything in one click.
Isn't it cool? It is it is very nice. So take advantage, click around, play around with this a little bit too when you have the time, of course, because it is very rich. You can get all the AIS data on the shipping throughout the world. So when that ship was stalled in the Suez Canal and blocking the canal, you can see in real time the ships backing up around the globe, because all of that goes up to a satellite. And not only could you see the ships, but you could see what cargo was on the ships. And so I don't know the level of detail. I haven't drilled down into that yet, but who knows? Maybe you could even find, the item that you were waiting on that was stuck waiting for the Suez Canal to clear up. It's that rich in terms of this database. So yeah, this SPL, let's see, this is SPLC is the function, supply chain analysis. So use that too. And like I say, just if you have any doubts about anything, start typing in the search in the blue window here to bring up likely strings for you. Okay, any other questions?
I just have one.
Sure.
Question. Okay, so in the first deliverable,
Mm-hmm.
assignment information, one of the bullets talks about, it says obtain economic data.
Right.
What exactly are you looking for about economic data?
Well, there you can go to that BECO function, right, that we just looked at. Where'd it go? And so what you really want to do is to get some sort of forecast of where the economy is going, where GDP is going, and use that to help influence your growth rate, right? So that's, and by influence, I don't mean give me the exact way that that's going to drive revenue, which will drive net income. I'm going to be very loose in terms of requirements on that. I'm going to say just, GDP is expected to grow at 5%. Well, that's a little high, but maybe 4% over the next 2 years. Okay, that's what Bloomberg's economists think, and that's what they put in their forecast. We are going to rely upon that. And here is how we, as analysts, think it's going to influence the growth rate for Sherwin-Williams over the next couple of years.
Okay, and so we need to use that growth rate in our performance to project out for 5 years.
Yep. Yep. Now, remember, when you're building that pro forma financial statement in Excel, you can just plug in any random growth rate. Everything's going to link back to that, so that when you update it with the actual rate that you think is going to prevail for Sherwin-Williams, everything else in your pro forma updates, including that free cash flow to equity. So that's why it's important to build that thing as formulas rather than hard coding anything in it. You definitely don't want to hard code into it. But yeah, if you were working for a brokerage house or an investment bank, you would have an in-house economist who's going to provide you with that information. We're going to rely on Bloomberg. You would also, either you or one of your colleagues would be an expert in this industry, and they would have their own forecast. We are going to rely upon what Bloomberg gives us. So some of these things we're going to outsource, if you will, to Bloomberg. But good point. Let me, unless there are other questions, let me move to the second deliverable, because I wanted to mention something about that as well. Let's see. Move things around here so I can get to it. Okay. Hang on a second. This is why I don't like to use that share screen. It clutters up the display quite a bit.
I have one other question too.
Yeah, go ahead.
So for the final deliverable,
Uh-huh.
How long is that document? I mean, what's the length requirement? How many pages should that be?
70, 80, give it. No, I'm kidding. Nobody's panicking, right? Since we're not, you're giving me links for the 10K, for the 10Q, for all of your media sources that you're coming up with. All of the financial stuff is going to be in an Excel. Sorry, go ahead.
I wish we had more time in the class.
Pardon?
Can you hear me?
Yep. Mm-hmm.
Yeah, I just wish that we had more time in the class to really dive into this and kind of get into some of the details.
Well, and for a first pass, it's okay. I mean, and we're just talking with Alan and Joey today in the data analytics lab about, this 7 weeks really constrains us because we don't have that breathing room. We don't have that downtime of a regular semester where we can actually dig into it. But I don't want to cut this out of the class, and I don't want to shortcut it too much. So, hang in there and we'll get there. But, realistically, you're talking about a title page, a one page, a table of contents. The exec summary is that one pager. Critical assumptions, investment catalyst, value drivers, about a paragraph each on the four. I ask you to come up with 4 elements out of any of those 3 categories. Pros and cons, again, a paragraph about each, and 2 pros, 2 cons. Pricing of the stock, I'd recommend that while you're definitely going to give me the spreadsheet, that you would give me a page or so about how you did the valuations, both in the residual income model, the PE relative valuation, and the free cash flow to equity. And then growth rate, I ask you for a paragraph on each of the forward-looking factors. So one of them could be the GDP is going to be growing at a much higher rate than normal. That's going to probably drive up our growth rate from the historical growth rate. How much is it going to be? That's up to you, but you're going to give me a wild guess, basically. Now, if you're doing this for real, I would want you to show me in very granular detail how that's going to flow through the income statement. Why are we going to gain more? Are we going to gain more market share? Are we going to gain? Are we going to have more sales in general? Keep the same market share, and then how does that translate through the balance sheet, or through the income statement rather, to an increase in earnings and ultimately an increase in cash flow? For our purposes, though, all I want you to do is give me a brief paragraph. The economy is expected to grow at 4% for the next 2 to 3 years, according to our Bloomberg economist. And therefore, we think that the growth rate of Sherwin-Williams will be 1/4 to 0.5% higher, or 0.5 to 1% higher, and leave it at that. So you have four paragraphs on that. ROE decomposition, again, I think that's worth a little bit of writing, even if most of the analytics is going to be in a spreadsheet. Talk about how the graphs have influenced you in terms of your outlook on Sherwin-Williams. So you're going to look at profitability, you're going to look at efficiency, and you're going to look at leverage, financial leverage. How do those things compare to the comparables? Where does Sherwin-Williams sit relative to the comparables on those three parameters? And then, of course, on ROE, right? Because that's really the end-all, be-all of this. Coefficient of variation of sales, very brief, few sentences about whether you found anything at all. I'd say it's about a 50-50. It's about a coin flip as to whether that will be helpful or not. And again, remember here, what we're trying to look at is how much operating leverage the company has. In other words, the fixed cost component of its cost structure. If it's very large, what you'll find is that small variations in sales lead to large variations in operating profits. So those two, the CV of sales will be small relative to the CV of operating profits. If they're about the same, then there's nothing much to say. There's not a lot of operating leverage in the company. But we always have to check something like that. And then, of course, your graphs, put probably 4 to a page is fine. And then probably another page of your reference material. That's your links. You don't need to include the actual reference. So I wasn't keeping count. What are we up to? 10 pages? 12? I definitely won't grade by weight, but I will grade by, can I follow through this? Does it all make sense? Have you thought about each element? That's what I'm looking for. And I'm definitely not going to grade the English, the grammar. I'll leave that for your English profs. Does that help, Marcus?
Yeah, that helps.
All right. Let me go back to computing the required rate of return. Given the amount of time we have left and what I want you to focus on, normally what I say is you want to compute the beta. Let's see, did I switch the share screen? Yeah, okay, we're on that. Good. So normally I would have you go to Yahoo Finance, download the price series for Sherwin-Williams, download the price series for the S&P 500, create returns on that, and you're going to probably have to do not only weekly, monthly, and quarterly, but you're also maybe going to look at 3 years, 5 years, different time frames. So that's what I call the span versus frequency. The span being, is it a 2-year, 3-year, 5-year? Frequency being, is it weekly, monthly, or quarterly data, and calculated beta. I think that's a useful exercise, because what you'll find is that calculating beta, most of these betas have very low R-squareds. Many times they vary depending upon your choice of frequency, whether it's weekly or monthly. It's going to give you a different beta. I had one example a number of years back when we did this exercise, and we calculated a beta using weekly data. It gave us like close to a +1. Used monthly data, it gave us about a 0. We used quarterly data, and it gave us something negative. It's like, that's not really possible, but that was what the data gave us. But I don't think that's as important as keeping our eyes on what's really going on inside this company. So you won't need to do that. I would say just take the beta from Bloomberg, whatever that is, and use that as your beta estimate. Don't worry about actually calculating that beta. So that should save a little bit of time. Let me go back and not sure where the beta is on here. Let's see, highlights. I know that they give us a beta somewhere in here. Well, I will just have to type it. There we go. Beta is 0.993 according to Bloomberg. Now, if you want details on how they computed that, you could get it, and they even have a history tab that you can look at, and but just type in the EQRP function, equity risk premium, and that'll give you Sherwin-Williams beta. All right. So that saves you a lot of time dealing with that part of it. Let's see, what else? I do want you to still spend time on thinking about growth rate, because you're going to get that information out of your industry forecast, your economic forecast, all of the popular press links that you find and material that you find. You should also look at the 10Q, especially the management discussion, to learn more about that. So that's going to be an important input to figuring out your growth rate. And remember, growth rate, and I've got this in another FAQ down here. So where is it? Here it is. How do I compute the growth rate? So you can start with what you learned in our textbook about growth rate. So you could use a sustainable growth rate, which is ROE times 1 minus the payout ratio. You could do a historical arithmetic average growth rate over 3, 4, 5, 7 years, whatever you think is appropriate, whatever you think the company, as long as the company is more or less the same company 5 years ago, I'd go back 5. If it's more or less the same company 7 years ago, I'd go back 7, whatever is appropriate. You could use a geometric average over that same length of time. You could get all three of them, just to give yourself some sense of what has the growth rate been historically for SHW. Then add to it those 4 forward-looking factors that you're going to get out of the economic forecast, the industry forecast, the popular press, the business press, the management discussion in the 10K, and anything else you can come up with that's going to help you to figure out how is it going to deviate from where it was. And you give me that paragraph on each of those 4 items, and you tell me it's going to be an increase, and we think it's on the order of 1/4 or 0.5%, or maybe we think it's a decrease on the order of a negative 1%. But I leave that up to you to determine. So I still want you to do that growth rate estimate, but in terms of the this item 2, you can just pull that straight out of Bloomberg.